The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the March 2nd magical Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have a magical Monday. And let's always remember that what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But what's scheduled, folks, that is absolutely real. And I really want to thank you for scheduling your time with me. I'm here to serve you, so feel free to pick up that phone, dial on it at 877-927-6648. Of course, internationally, you can call in at 727-445-1044. Remember, if you've got a question, someone else has got that exact same question. So don't call in for yourself. Don't call in for me. Call in for them. That way you've got your first random act of kindness out of the way, which is something that each of us should do each and every day. This is Magnificent Monday. Of course, it's TFNN. I'm Steve Rhodes. Welcome to the show. Right now, Dow is up 93 points, trading out at 18,225. The S&P is up 6 points, trading at 2110. Composite up 26 points at 49.89. The Russell's up 4 points as well. Let's go start off by taking, well, actually, the first hour of the show, we took a look at the long-term picture just to get our bearings out there. And maybe I'll pull those charts up in a bit. But let's go actually take a look at short-term, what actually has just taken place. Now, I'm going to pull up the 120-minute chart out here. And the 120-minute chart is for the S&P futures contract. And what I do want to show you inside of the S&P futures contract, number one, it made a nice little high out here. This was at about 2 o'clock in the afternoon. This was on February 25th. As it was making that high, was doing it with less relative strength out there. Got a nice little bearish reversal signal coming into the 4 p.m. close. That was on February 25th. Was also making a seventh wave pattern inside of the Chapman wave. Again, a 2-hour chart that Stevie's looking at. And what that actually began with, as you would expect, the beginning of a move down. Now, that beginning of the move down sent price in this little descending price channel out here. And that was pretty well contained up until we just came into this 10 a.m. close out here. You can see that price closed up above this level decisively. Now, price right now is trading right into the point of control, that little bluish line, if you can see that if you're watching this on Tiger TV. That's at a price point of about 21.08 out there. And so price is traveling right now at a place where it's really kind of comfortable. The key here is that the ascending price channel that was in place here has been broken. Maybe price comes back and tests it. If it tests it and rejects it, I mean the top of that line out there, then that says, okay, the move lower to the is done with. You've seen 4 little waves to the downside. You haven't seen a 7th inning stretch out here. Another area of resistance for us to be watching is going to be 2111 now. 2111 is your TAS market profile resistance area. If we see it close above 2111, that says price inside the ES Mini is going to go back and tackle those highs out there, which inside the ES Mini is at about 2117.75 out there. And that's what's going on. So now in the beginning of the day at the 9 o'clock show, we actually took a look more so at what was going on a longer term. Now we've just gone and done a little bit of micromanagement by going ahead and taking a look at a 2-hour chart out there. Nonetheless, let's go take a look at what's going on inside of the ETF structures out here. Let's go take a look at the QQQ ETF. This is the daily chart for the Qs. What do we know about the Qs out here? Well, let me get rid of a couple of lines. Let's do this. Here's one of the things that we know. One of the things that we know about the Qs is that there was a B point of an A to B equals CD pattern. That took place on November 28th. Now, November 28th, the day after Thanksgiving, the QQQ ETF got up to a high of 106.25. Did it with 17 million shares. That says it's always tough for us to benchmark what's the real volume as price gets above that. Price closed above that with 22 million shares on February 12th, and then it had 29 million shares on February 13th. So in essence, you've got, if you didn't know that Thanksgiving was November, if you didn't know the day after Thanksgiving was November 28th, and you were just looking at the chart straight out, you would say that the QQQ series has a confirmed A to B equals CD pattern. The one-to-one price projection on that pattern would take you to 115.36 out here. And at this stage of the game, there is this continues to defy gravity. And gravity, in essence, was the Qs were making highs out here last week. 17 million shares on the 23rd, 19 the next day, 19 million the next day, 22 on Thursday, 27 on Friday. The Qs typically make highs, intermediate term highs, with light volume. But does that mean that the high is put in? You haven't seen really a reversal candle out here. At this stage, we have to go with what we know. And until we see any kind of sellers or anything that's really going to spook the market out here, you have to say the preponderance of evidence at this stage of the game is that the QQQ wants to run to the 115.36 level. You are at 109.14 as we speak right now. And that's what's going on inside of it. If we take a look at the Russell 2000, the IWM. What do we know about the IWM? Well, first, let's go down and take a look at a weekly time frame out here. Because the weekly time frame, what we know about the IWM, let me get rid of a couple of lines out here. Let's put some new lines on the chart. Actually, let's go ahead and get rid of a couple of lines as well. Give me a moment to do that. We'll clear this up, because what we know about the IWM is the consolidation pattern out here, and that's one for us to truly, really focus on. Now, the consolidation pattern inside of the IWM, the Russell 2000, basically the top of it being this is a weekly chart, by the way, that we're looking at. Takes you back to March 3rd, 2014. And the high there was 120.58. Now, on a weekly basis, 270 million shares were up there. The first test of that level was 146 million shares. That was the week that began June 30th. The next time we saw a test was with 99, and then the following week, 133 million shares back at the end of December. Remember, all going against 270. Now, what the IWM has done is it's broken above it with, not conviction. 133 million shares the week that began February 9th. The next week, 84. The next week, 111. Nonetheless, it still is continuing to move higher. It has broken out of a consolidation. That consolidation being a 16 to 17 point move, anywhere from 103 to 120. So right around there, 16 to 17 point consolidation. You can add 16 or 17 points on top of the 120. It takes you to 137. Even without the, remember, volume is only one element of what goes on inside the momentum of a stock chart out here. Where volume can really be used is helping you to identify areas of support in case there's any kind of a pullback. So right now, support, believe it or not, is now inside of the IWM at the 120.58 level, or you can say at least this key reversal session high from December 29th, which was at 121.41. Stays out above that. The IWM message to you and I is that it wants to move up to that 136, the 137 type area. That's what's going on inside of that ETF. If we take a look at the SPYs out here, this is the weekly chart for the SPY. It's horrible because they've got a couple of sales that took place out here, and they're using this high from the week of December 15th, and it really makes it hard to give you accurate information, because I ignore that, because it really wasn't the same type of, real trade. I mean, it was a real trade, but in any event, Here's what we do know about the SPY. This is a weekly chart. I'm going to use the high from the week that began December the 1st, 429 million shares. Now, price is up and above that with 465 million shares. So on a weekly basis, we have an A to B equals CD that's been confirmed with volume. And on that weekly basis, just to give you an idea of where price should be able to move to, what that price projection gives us, it gives us a price projection of about 224.41. You are trading at 211.56 as we speak right now, and that's on a weekly basis for the SPY, for the SPYs out there. Let's go finish this off and take a look at the Dow Diamonds out here. The Dow Diamonds were the weakest on Friday. What the Dow Diamond should see by the end of the day is should see a lower close from Friday. You're up $109. That's possible. I am not saying that's going to happen. In fact, I don't have any indication on my screens out here as I take a look at correlating things that is going to happen. I would say that it is likely not going to happen. It should happen because the sellers got control of the market on Friday. Apparently, they went out and they celebrated. They had too much to drink because they did not show up to work this morning. When we take a look at sellers inside of the Dow Diamonds, let's put this back on the daily chart out here and go see what the daily chart is telling us. Now, swing points for us to be observing inside of the Dow Diamonds take us back to December 26. Obviously, the day after Christmas. Volume there is going to be light, 1.9 million shares. And price got above it, however, with 8.9 million shares, a close above it, 9 million shares basically on February 20th. You and I don't have to be math geniuses to figure out that the Dow Diamonds have actually got a confirmed A to B equals CD point to the upside by taking out that B point with volume. So what does that set up for both you and I? What that sets up for us is a price projection with your major bottom back in October, right? October 15th, major bottom out here. The high out here, that's going to be your A point. December 26th is your B point. And then that next major bottom taking place on February 20th. Remember, as we began the trading year out here, what I suggested to you, because of patterns that were out there, patterns that have been established for a long period of time, was that the market was going to go ahead and pull back into the end of January. Now, the date, I had several dates. I think they range from the 22nd to the 29th of January as that significant low, the low for 2015. So until that low gets taken out, you've got to assume that that the cycle that we are still in, until that low gets taken out, then the cycle is the cycle that says this market moves and motors on higher into the May, June, July time frame. Yeah, maybe there's a little bit of selling in May, but the May is not going to be the high out here. It likely will see the market move higher into the July area. Now, inside of the Dow Diamonds, doesn't mean that we don't get a pullback. But what we have to do is take a look at the information the market's giving to us. And right now, right this very second, we can say nothing more than the Dow Diamonds want to move up to 192.54. They are above the B point on a daily basis. They are above it with conviction, with the volume. Yet today is the day that the Dow should be pushed lower. It's not. It tells us that sellers just simply have got no control. In fact, they are out of control. they're not around. And so let's just go and take a look. You know, you got a confirmed A to B equals CD in the SPY, a confirmed A to B equals CD in the Dow Diamonds. I think we got a confirmed A to B equals CD in the Qs. In the IWM, not so much. Hey, the IWM is not going to take this market apart and take it south. No way, no how. This is Steve Rhodes. This is TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless
unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up on 16 right now. S&P is up 8. Okay, so we took a look at the message of the markets, take a look at the ETF structures out there, took a look at our normal price projection, use our normal price projection tools to help us identify where price is likely to head to. We know that price is following along the cycle patterns out here that suggest that the markets are going to move higher into the May, July timeframe of this year. And so there's nothing that is out of sync. Now, do prices continue to move higher in a straight line? I think they could, but I don't, they normally don't out here. But they could. I can tell you that the bottom, so I was calling for a intermediate term top that was supposed to take place last week. Actually, I think it was the end of the following week. That certainly didn't necessarily take place. We saw a sideways movement inside of the Dow out there. So in essence, it somewhat fulfilled that price objective. But the market should have moved down for a couple days. Well, today's March 2nd. The market should have moved down into about March 5th, if I'm not mistaken, as the exact day out there. I'd have to go back and take a look at my my newsletter service, Mastering Probability. In fact, you ought to move over. You ought to move over to the TFNN homepage and go click on my name and our newsletters and go check out Mastering Probability. You should just simply go do that and test drive it for 30 days and just simply download the expanded edition. It's got charts in there that you could actually use for a lifetime. That if you just simply followed those charts that are at the bottom of my expanded edition of the newsletter service, you pretty much, and you don't have to be a technical person. So these are charts here. Look, I know that 70% of the people that are listening to the show are folks that are managing longer-term funds, retirement accounts out there, and you're trying to make decisions as to when to add, and what to do. If you just follow those chart patterns that are at the, which is easy to do, chart patterns at the end. That's the reason why I put it out there. So you don't have to be a technical trader. You don't have to understand swing points, A to B equals CD patterns. You just simply can anticipate what the normal markets do with regard to when they're making highs, when they're making lows out there. And that way you can turn off all the outside noise. And the noise out there is just to scare the living heck out of you. And you don't want to do that out there. Now, I'm not here to scare you. I'm here to just help you take a look at the markets, and let's just look at it based on information that gets presented to us by the market. Let's you and I always be willing to change as soon as we get new information. And what we just did during that first segment is we used the information we had. What's the information? The NASDAQ is super strong out here. And if we take a look at it, this is a daily chart for the futures contract. We can see that the NASDAQ made a low back here on January 16th. So that's its low, and one of its lows. And since that time period out here, what we can see is that today, right now, we've just gotten into the fourth wave. Inside the Chapman wave cycle out there, you've got 7 potential waves out there. So it's now just into that fourth wave. Always a time period to start be getting a little bit cautious out here. So it's now joined the team, but the rest of the team is way ahead of it with regard to wave patterns out here. Just take a look as an example. The Dow is the one that's up 108 points, right? So let's go take a look at the Dow futures contract. And if we, in essence, use that same swing point out here, that's from the trading session. Not the same. This is February 2nd is when it actually made its low. If we take a look at the Dow futures, just as an example out here, if you come to the Dow futures, the high was put in on December 26th, goes ahead, travels in a consolidation zone out here. And in that consolidation zone also makes a fourth move to the downside, which completes on the trading session of February the 2nd out here. That's the low. Remember, Stevie was saying, hey, cycle-wise, the market is likely going to make its bottom, its low, its significant low for 2015 during January, the end of January. Ideally, cycle-wise, it would have been the 29th. This was the 29th, by the way, was the day before. You could actually, or 2 days before, you could actually argue that bull sash candle, that low, really was the low for the most part. And that low was just simply tested, because that's true. Now, there was a slightly lower low interest session that took place on February 2nd. That's what we're going to use, in just simply starting those cycle counts. Well, today, for the most part, you're either in the sixth or the second cycle to the upside inside of the Dow futures out here. Well, what that means is that let's say tomorrow's a lower, doesn't take out the highs of today, whatever that might be in the futures contract, and then you see on Wednesday a higher high. Now you get to that 7th inning stretch out there, and that's where you could see some type of retracement out here in the marketplace. So there you need to, if you're following the Stevie triptych out here, probably right now is not the time to add. There's going to the retracement may not be of significance. Might only be a dead cat bounce point 382. Maybe it's not even that. But the Dow futures, they're suggesting okay, if we're going to get one, and the S&P in essence is really doing the same thing that we did. The S&P futures that we looked at inside the Dow. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 109, S&P is up 8, and yes, the NASDAQ composite did hit the 5,000 mark, trade at 49.96 right now. Why the big deal about 5,000? Okay, just because it's an even Steven number out there. Oh, I can celebrate even Steven. I like that. But that's not really where the NASDAQ composite is going to run into resistance at 5,000. Where the NASDAQ is going to run into resistance is at 5,082.24. out there. How about that to the penny? And that says that really what the NASDAQ's going to do, it's really going to go test the highs from March of 2000. The actual high out there is 51.3252. What both you and I want to be watching is what takes place at that 5,082.24. Does price spike above, get to the 51.3252 level? That's the all-time high. Does it get and spike that, and then drop back down below 5,082? Again, it's a monthly chart that we're looking at, so it's the monthly basis that we're going to be most concerned with out there. If price gets above 50.82, goes and tests 51.32, comes back and retests 50.82 for whatever period. Again, it's a monthly chart that we're looking at out here. Then the signal is that where this is headed to is 58.30. Just simply looking at natural areas of support and resistance. That's a monthly chart. Let me put the weekly chart, get the weekly numbers out here. I've got to, let me go ahead and actually turn the weekly horizontal trading ranges on. Give me a moment here to do that. I'll turn off the monthly. We'll turn on the weekly. And on the weekly basis says that you're at 51.16. So weekly basis says that intermediate point to 51.16 becomes its target inside of the NASDAQ composite, and not till 55.41 does it run into any kind of resistance out there. So that's really what's going on. In my opinion, these are the numbers. These are the better numbers to be paying attention to versus just simply NASDAQ 5,000 and what the heck does that mean out there. And that is what's going on inside of that index. Let's go back now and take a look at so we've covered the ETFs, covered the NASDAQ here. Let's take a look at gold and silver and light sweet crude. Let's go take a look at those commodities. So gold is up $2. Not really too bad as we speak right now, but we know about gold, descending price channel that it's traveling in. What we also know about gold is we don't see our next full moon until this Thursday. I believe it comes in on Thursday. We know that full moons, that's a full moon chart that you're looking at out here. Initiation moves typically take place. That's for some reason, I can't tell you why, but for some reason, the full moon has an impact on gold, to the upside or to the downside. Boy, that's what it might give. Boy, it might take both sides. No, when I say to the upside or the downside, I say from an initiation standpoint. I say from a move with any kind of conviction. More times than not. Just take a look at the last two as the example out here. And no, 2 times do not make a good sample size. So go do the work yourself and go apply the full moon to your gold chart and go take a look at the conviction that is behind the move 8 times out of 10. Or maybe it's even more than that. But go check it out yourself. The last 2 times we saw a full moon come in, that was on January the 5th, and that turned out to be an initiation move to the upside. In fact, you had gold. I don't have that box turned on. Give me a moment here. You had gold that day. Made a low on that full moon down at 1177, and gold didn't stop running until it made a high out here on January 22nd, where it made the 1 to 1.272 A to B equals CD to the upside out there. And as it got up to the price point of about, what was it, 1307. And then it starts to pull back, but then the real initiation, that took place on that full moon on February 3rd, and that was just simply a move lower. Right now, you're priced out at 1211. On that day, the high was 1286 out there. So you're looking at a 75-point move to the downside. I suspect that the move to the downside is not over, and that we'll see price get below 1197, and then below that, 1197 happens to be your 0.618 retracement from the low back in November to the high that we have seen most recently out there. I don't know if that's going to take place for sure, but I think it's a pretty good chance. Now, what you and I will be watching is what takes place on Thursday and Friday. I don't know when that new full moon comes in, but we'll be paying attention. Is this going to be a continued acceleration to the downside? We'll just have to take a wait and see. We want to see how price is trading as we come into the Thursday time frame out here. But at this stage, there's nothing inside the charts that suggests that gold has broken out of its current descending trend that is in place. If we go take a look at silver out here, take a look at the silver chart. She's traded at 1650. This is a daily chart that we are taking a look at. We take a look at trend. I don't have a channel line here yet drawn in for silver. So you and I, we're going to do that together, see if we can come up with something out here. I think if I draw it like about that, and I'm not sure if this is it, but I'll go ahead and mark that. Let me go ahead and move this a bit. There we go. Let me go ahead and change the. Well, I can leave that as a yellow color. No reason that I can't do that. Now that I'm taking a look at this, let me just see if I want to move the bottom line out here. Let's see, so how many connections? I'm just looking to see how many co-located either opens or closes I can find, because you'd like to have at least 3 little connectors out there. We'll just simply go ahead and leave it here. But what you can see in the case of silver, really the same kind of setup out here. You can see that price on any moves higher have run right smack dab into that channel line out here. So until you see silver or gold break above that channel line, it's in what kind of trend? Downtrend out here, and inside. And should we expect that to continue? I think you got to expect that to continue until you see something else. Now, in the case of silver, it's giving you a little bit more information. Just like the NASDAQ composite, if you didn't really care what chart it was that you and I were looking at, which you shouldn't, because the tools work the same way. Remember, we took a look at the NASDAQ composite. You and I knew a while ago that the NASDAQ composite was more likely than not going to go test the swing point high. Why? Because on a monthly chart, when we looked at the monthly chart, price closed inside that swing point. You close inside a swing point, you're going to drift to the upside or the downside. Right now, we're dealing with the opposite. That's called the drift to the downside. Until we see silver close above 1683 as well, because that happens to be the swing point. That's from the trading session here on December 1st. That's the high of that trading session. Until we see price break above that level, then the presumption of evidence says, shoot, silver can go down and actually test the 1470 mark out there. You're trading inside that swing point. Can that happen, and why can't it happen? Of course it can happen out here. Silver's in a decided descending channel line out here to the downside. You're trading inside the top of the swing point line. That's a big swing point because you're going from 1470 to 1683. So it's a giganto. Now you close above 1683, you're going to close above that descending price channel out there, and then I don't really care what the commercial traders are doing. I don't care that they've taken large net short positions in now, not as high as it was 3 weeks ago, but they're still up at levels where bottoms don't form, where they're still betting on some additional movement to the downside, and that's really what this chart looks like. This is just simply the reverse of the NASDAQ composite, only this is a daily chart versus the NASDAQ composite was a monthly chart. So that's what's going on inside of silver. If you take a look at light sweet crude trading at 50.32, just simply consolidating at these lows out here. Where is this likely to head to? You know, right now it's bouncing around between 48.55 and $55 out there. So, you know, if you were looking to play one of the, on a short-term basis, one of the ETF structures out there, USO, some of the others, look for support. The way you could play this is that bounce in between when light sweet crude gets into the 48, 45-ish range, and you would close it out if you were to see light sweet crude close below the low of February 26th. 47.80. You close below that. Now, here's the deal. You close below that, it might be 46.66. That stops the descent to the downside out there because that's your 0.786 retracement. I don't know if that's the case or not, but you most certainly can play this little bit of a consolidation range that has formed since the February 2nd level out there. Like my belief with regard to the move down in light sweet crude, I know everybody's got it bought into the story of it being, you know, the fracking that's going on. Not that that's not a story. I'm not saying that it's not a story. I'm not saying that that's not great. That is great. You know, and everybody's talking about the story of the economy slowing down. From the economy slowing down, you mean from July 1st to where we're at today? Come on, folks. Give me a break. Not even close. Not even a chance out there. That's not the case, okay? So what is it that drove the price of light sweet crude, you know, from in the $99 range down to the $41 range out there? Well, what Stevie believes is that it was just simply the world getting together and tightening the noose around Mr. Putin out there because of what he was doing over in the Ukraine, because it was easier to say, if you're not going to play in our game, we're going to show you a game. We'll show you a game out there, and and you got to build up a story for it. You know, could people actually come out and communicate that story on the air? If we could go back and get those replays, which were right around the end of June timeframe, is when I really first began talking about that theory out there. Can I prove that theory? Absolutely not. But I began talking about it before it actually took place out there. So at this stage, we got to go. It's a pretty good theory because it seems to have worked out really well. Well, now with the latest shenanigans going on over in Russia, the world leaders and folks can't be too happy about that. Are they going to continue to put pressure on him? If Stevie's right about that, and if I am, that says price goes down and visits the the $44 range. But I forget where the longer term. I think it's around $39 or so out here. But in any event, from a trading standpoint, right now you got this little sideways consolidation that's running between $48.50. You don't have to prove my theory or anything, but between $48.50 and $55 out there is your trading range for light sweet crude. If we go take a look at, what should we take a look at out here? What else should we look at? What else? Just seeing what pop. Let's go take a look at some of these, say, mining equities, because the mining equities, such as Rand Gold, GOLD, which is down 95 cents this morning on 217,000 shares. Let's go see what it is doing. Has this formed a similar type of descending price channel that we should be focused on? Hey, why not? Let's go draw it in. And let's continue to follow it. So we'll draw in its potential descending price channel out here, probably about right here, and then somewhere right around this-ish level. So we'll go move this here. So here is the potential. Yeah, okay, that works on the top side. Now let's go see what works on the bottom side out here. We'll say it's, probably right around there. So there is Rand Gold Resource. Now this is held up better than the actual mining equity is held up better than gold itself when we take a look at retracements, because in this case, if you go from its low, now this low here is using a different swing point. This is using October 31st, 2014 as the low, and the high is the January 30th level. So we can see here is prices only pulled back to the 0.382 retracement, which is 75.21 out here. So that's pretty nice. Now it's moved up off of that. In the case of Rand Gold, maybe it's going to continue to trade in a descending price channel as it is right now. And so where does that set up your next buys out here? Well, if you see price close below 75.21, your 0.382 retracement. If you see it close below that level and it's moving down with more than 639,000 shares, Rand Gold will have taken out its most recent swing point, which was February 23rd, with more volume. 639,000 shares, again, is that number out there. That says that price then moves down to the bottom of that descending price channel out there, and that could be your next buy inside of Rand Gold. Likewise, if Rand Gold is able to break through this descending price channel out here, and gold, in fact, does something similar, because these two are going to move tandem. They're going to move directionally in tandem with each other out there. The GDX, the miners, for the most part, on average, on a high average, are going to move in the same direction. Doesn't have to be the same dollar or percentage direction, but just simply from a directional perspective out here. So that's what's going on inside of Rand Gold. If you take a look at Gold Corp, GG, number one weighting structure inside of the GDX, that's back 42 cents right now, trade down at 21.56. Looks like we can probably draw channel lines out here for this equity. So let's go do the same. Let's go do that and say that that's probably its channel line, give or take out here. So let's go pull this back. You guys can do the same thing on your chart, just a great tool. So we'll use that as the bottom and the top for the time being. So in the case, let's go take a look at retracement levels. Is Gold Corp stronger than Rand Gold? I don't know the answer to that, but let's go take a look at it. Let's go to its October 31st swing point low to the high, which was put in Gold Corp on January 21st. And it is slightly weaker, you'd have to say. The retracement right now, the 0.382 retracement is 21.94. Or 21.54, so it is slightly weaker than Rand Gold was, but not to any extent that is scary or anything along those lines. Where's your next buy inside of this equity? Well, today it happens to be moving lower into a swing point from February 24th. That's got 6 million shares, and so far you've done 3 million shares. Well, guess what? Gold Corp is with the number one weighting structure inside of the GDX out here. It is giving you a signal that it's going to go ahead and move lower and test those lows, 2090. You're at 2160 as we speak right now. So long as it closes inside 2158, you're moving into a swing point with volume. If you close inside that underneath 2158, pretty darn good chance you're going to go ahead and test the lows out there. Maybe even go test the bottom of the descending price channel. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 121, trade out at 18,253. The S&P is up 9 points at 2113. NASDAQ Composite up 33 points. She's trading out at 49.96 out there. Let's take out a request here to take a look at LinkedIn, LNKD. So let's go take a look at this little puppy, this little equity out here. So let me pull this back. LinkedIn is at all-time highs, looks like maybe a couple of days ago. So let's do this look at the long-term first. Long term, let me just really what I'm going to do is switch over to a weekly chart. So let's take a look at LinkedIn, see what it is that we know inside of LinkedIn. Number one, we take a look at horizontal levels of resistance. In this case here inside of LinkedIn, that would have been the high that formed on September 9th. Weekly chart, the week that began September 9th. There were 7.3 million shares out there, 257 and change was the number. Price moved through there with conviction. 16 million shares, wide-ranging price, accelerating volume, taking out a B point of an A to B equals C to the upside, a larger A to B equals C to the upside than what we're taking a look at. The smaller A to B equals CD pattern on a weekly basis says price wants to get to about 283.87. Now, the message from last week inside of LinkedIn was a little doji candle, just like the Dow had. A little candle that says, I'm a little tired. So, and we've seen for the last 2 weeks, this week we just began, so I'm not going to figure out what this week's candle is, but the last 2 weeks we've seen small bodies out there, and small bodies. The body of the candle is the essence of price. The wicks, the upper and the lower wick, it's nothing more than extreme emotions out here. The temper tantrum, if you will, between the buyers and the sellers out here. Nonetheless, we still have a confirmed price move up into the 283, maybe even higher, because if we really go back and take a look at the A to B equals CD pattern inside of LinkedIn over the long haul. So the long haul price projection inside of LinkedIn, let's see if we can come up with that. I'm here. You heard it here at TFNN. If we take a look at what that price projection is, that actually says longer haul, what LinkedIn wants to do is get up to 337.59. So what's that mean? That means you want to try to buy LinkedIn on some type of pullback. Now, if we take a look at where those pullbacks might take you to, in the case of LinkedIn, we've seen several signs of strength out here recently. The first one was a big gap up, not exactly the widest of price spread. It wasn't too bad. August 1st, 2014, there were 10 million shares. That was gap number one. Gap number two took place out here with 7 million shares on October 31st. Eyeballing this looks like a three-gap play inside of LinkedIn. Looks like a larger gap that took place on the trading session of February 6th, 6.9 million shares out there. Looks like wider in price, probably wider in percentage, although this second gap could be the percentage when you want to have them be both. That says it could be an exhaustion gap. I'm not going with the exhaustion gap theory here right now. Where is it that you would take a trade on LinkedIn at this stage here? You know, has it come back to fill the gap? It's gotten really close. The last time that I had this gap up back on October 31st, it came down to the bottom, which was the high of October 30th of 203.74. Didn't totally get down there. It got down to 207.04. So your real buy, if you can be patient on LinkedIn, would be having this thing come back around the 238-ish type level out there. Hey, just before we're off the air, let me just do this. Let me go turn on our TAS market profiles on the daily basis. And the earlier point of entry could say about the 257 mark. That was the swing point that it took out and is the bottom of the TAS market profile box. Hey, folks, it's great to be back with you. Hope you had a fantastic weekend. Make sure that you have a magnificent, magical, marvelous Monday. I know I'm going to, so make sure that you do as well. And stay tuned because our man Basil Chapman is up next. Until tomorrow, have a great day. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.